Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, May 10th. I am your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That is our home on the web. MarketTalkAg.com. You can find us there. Find all of our social media links listed there as well. And you can also find all of our great radio affiliates all online. MarketTalkAg.com. Well, we had a meltdown Monday, to say the least, a sell-off in the grain market here today ahead of May's WASDE report. Let's talk about it. Let's bring in our good friend Bryan Doherty with Total Farm Marketing by Stuart Peterson. And Bryan, great to have you on for another Monday. And like I said, kind of a meltdown Monday. It was a correction that we saw in the grain markets today. We've been waiting on a correction like this, it seems like, Bryan.
Yeah, if you might remember last week, through last week, I think we had 8 consecutive closes higher in corn. And in the last 3 in particular, real strong. Right at the end of the day, rally strong, big sharp closes. Not the story today. Profit taking, a little bit of a change maybe in the kind of perception of how this crop is going. One, it's getting in the ground quickly. Expectations are well north of 60% planted by the weekend. You had better than expected rains over the weekend, and your 6 to 10 day forecast looks for basically normal temperatures. So we're not going to see this beating heat, and it looks like above normal precipitation for almost the entire corn belt. It's been cool as well, and for many, that's it's not ideal for germination and to pop the crop out of the ground. But when it's dry, you don't necessarily want 85 and windy either.
No, you do not. And a lot of those things you mentioned, the biggest ones, obviously, we caught those rains across much of the Midwest here. Even some of those dry areas caught a rain. And then, obviously, the WASDE report coming up on Wednesday seemed to be the two things that really kind of took hold. And I think more so that WASDE report, we're kind of saw a lot of the funds try to liquidate long positions here today, especially corn and wheat. And it was amplified, I would think, by those rains that we saw. And as we look at that WASDE report coming up on Wednesday, we know it's the first time we get new crop balance sheets. And, the way USDA has been, we could get some surprises on Wednesday, Bryan.
Yeah, the funny thing is the market, or at least the pre-report expectations by some, is that you're not going to see a lot of change on, let's say, South American yield yet. You're not going to see a lot of change on U.S. demand. Those numbers are already there, and true to form, the way the USDA has seemingly over the last, forever, I guess, they kind of work their way towards numbers. Sometimes it feels like maybe they get too slow on it or too quick on it, but so that report will be out Wednesday, and traditionally a report that really doesn't offer a lot other than adjustments to demand, some supply possibly, but usually demand. But the key will be South America, and that's been the key. Dry weather pushing the corn market the last couple of weeks. And then here at home, planting conditions, the U.S. dollar's weaker. One thing we didn't mention yet today is that wheat prices had a really rough session, a little better weather there, not competitive in the world market, kind of ripe for a correction. And when it went today with corn and beans, there's a lot of, I think, stop orders triggered, which after a strong run up in corn, not unusual to see that. Plus you've got, this idea of maybe higher prices on weakening open interest. That could tell us that you've got fewer buyers buying and some exiting the market into the end of last week.
Yeah. And looking at wheat specifically, you mentioned that. And I mean, spring wheat contracts really, I think, were the biggest loser today, down some 40 cents. And you still look up in the Dakotas and the Canadian prairies, just how dry it is up there. So to me, all of the moves lower today just feel like some nervousness ahead of this WASDE report and those longs trying to get out of this market. And if I'm a producer, Bryan, overall, I guess looking at all of these commodities, I mean, what should I do, if anything, differently ahead of this report after seeing today?
Yeah, so what you should do is really what we talked about last week is make sure you try and keep yourself balanced as you move into this report and beyond the report. And that is the next 90 to 120 days, we're either going to know if we have more acres and big yield or less acres and less yield or some kind of combination there. But the rallies come pretty sharp and hard early in the season, so make good common sense, I think, sales. What does that mean? Well, when you look at revenue per acre, those type of things, keep selling into the rallies, cover those with call options if you need be, or bull call spreads. That's an option, fixed risk. Same thing on the bottom side. We'll again preach the idea of buying puts or bear put spreads, something like that. I just want to make a quick note on that. A lot of times people look at the cost of puts and they're like, oh, that seems just expensive. Well, they are expensive. Somebody's selling that and taking on unlimited risk. So for lack of, let's say, better words, sometimes when the market's high, you just have to sort of ante up and get up in there and buy what the market's selling at that time, because days like today make you think twice about not doing that. And all of a sudden you're down 25, 27 cents in new crop corn. It's come a long way. It could drop a long way ultimately by harvest.
And that's very, very true. And, obviously with Wednesday, with the report coming out, we could see another big drop depending on what the numbers say. I mean, like we said, USDA, typically this is a report that there's a lot of change, but getting those new crop balance sheets in, Bryan, and I think just the general feeling from the last few reports we've seen with surprises out there. I mean, I would feel like if I'm a producer, what you just talked about, getting some puts in place, creating a floor would make the most sense, just because I feel like there's more volatility at this point in the game than we've seen in quite some time.
Yes, almost a decade, or maybe never. What's interesting, a day like today, we talk about volatility. Um, all last week when we'd see the market, let's say, move higher, and then it would set back. You'd get some setback, and it would move a little bit higher and set back, and try and sell off. But ultimately, the buyers took charge. Today, we saw the sellers take charge. We saw 2 or 3 occasions where all of the markets tried to make a comeback. A lot of the speculative interest was, buying dips last week paid dividends. So you tried it again this week, it didn't. But one of those things we talked about, why the volatility picks up often, is when you have a market that's moved as fast and as far as some of these markets, you end up with buyers who have been in the right place, right time. They made a lot of money, and they're in a position where they can really benefit from additional higher prices. So by buying more, well, they also move their risk orders up fairly tight under the market too. So what you can have is a day like today. You talked about profit taking or whatnot. It doesn't have to be just those who are along the market. It could be those who are looking to hedge their corn or sell it, running stop orders up under the market. So all of a sudden that starts to weaken up a little bit. Oh, you could argue this, argue that. It weakens up a little more, and it all starts tripping those orders, and it really puts some pressure on. And you go, wow, look at this volatility. Well, part of that is just because there's orders that are sort of on the automatic. When the market starts going down, it trips them. People may not be bearish, but it's selling anyway because the market today looks bearish.
Well, and I think overall, and that's a great point you mentioned there, I think overall the sentiment in this market is still very bullish, or leaning bullish. And I feel like it's going to be that way for quite some time, barring any major change to weather here, weather in South America, which at this point we're pretty much where it's going to be down there, or some change, some black swan event comes in basically that could change the bullish tone of this gray market, Bryan. I think that's kind of where that sentiment still lies, and it's going to lie for a while.
We've had some major developments the last month. One is a big downgrade, or what will in the end be a big downgrade to the southern hemisphere, particularly the safrinha corn crop. Just ran into hot and dry. 2 big purchases by China. So another one today. All this for new crop now, because the old crop numbers are pretty strong. I don't know if you can even load any more ships out faster than what these are being loaded. Mm-hmm. And so you had those 2 developments. The dollar has been weaker. On Friday hit its lowest level in months. So you got some outside factors there that ultimately probably lean more toward the idea that dips yet are going to be buy opportunities, and ultimately we probably move higher. It's funny how sort of the mindset changes. All I heard basically last week and even early this morning, guys and say, well, $8, we're going to take the highs out. We're reading this, we're reading that. The market sort of falls apart and people are kind of scratching. Well, maybe we've seen the high for a while. Maybe we've seen it for the year. That's why I would kind of encourage that balanced approach.
Very, very true. On the flip side, here on Monday, cattle futures took the opportunity from the lower corn prices, traded higher, especially the feeder cattle market. But I know, especially on that fat cattle side, we're starting to, maybe just see some underlying issues there, just when it comes to slaughter capacity, demand. It seems like there's a lot of underlying issues in this cattle market right now that we need to pay attention to. Brian, is that what you are seeing as well?
Yeah, one thing that kind of struck a nerve. I mean, the stock market keeps going up. When you looked at the jobless numbers last week, and they were way, way below expectations. So, what does that do for the demand side of the coin? Does it do anything? This should be when we're really starting to hit our stride, coming off of COVID and the grilling season. So where do we go from here? Well, it still looks to me, if we look at the back months, have it right, and we're in the 130s. A more limited supply, you get higher feed costs, you're probably going to see these cattle be pushed through a little bit quicker now. So I like the upswing in the market. We talked a couple weeks ago, or even last week, about just kind of a tough looking market. All of a sudden today, take a look at August cattle over 120. First time we've been there in 3.5 weeks now. We're back above all the critical moving averages. All of a sudden the stage is set if we see some follow through, a retest of those highs. So we're hopeful that demand circles back in. We talked about the cool weather, and not great grilling season this weekend. I mean, beautiful weather in parts, where I'm from, beautiful sun, but it was 45, 50 degrees. Not quite to that optimal grilling, but I like the long-term demand. Feeders, yeah, really, really bolstered by weaker corn prices today. And maybe they're already signaling that corn prices may have seen enough upside for the very near term.
Yeah. On the flip side with hogs, we were down a little bit today, and it looks like the hog market just trying to find some more of that support here to continue to push prices higher. After we broke through some of that resistance here, we continue to test it, and now maybe a little bit of a pullback just until we see more support come into this market. Is that what you're seeing with hogs right now?
Yeah, you are. I mean, it's been a beautiful uptrend, textbook. Everything looks good. The May contract will be, history here shortly, but the summer contracts posting into new highs last week, leaving a gap on the chart. Good underlying demand, limited. I think the weights will be limited. They're going to come down with these higher price feed costs. Ultimately, that circles us back to another. A year ago into the summer, we were feeding everything heavy because it got backed up. It'll be the opposite this year. So we saw the corn stocks numbers start to build up. Or we'll see those maybe build up as we find that feed disappearance maybe isn't quite as strong as people are thinking, but that's down the road. But I like the demand of the hogs, in particular, just this idea that we continue to see strong international demand, and I don't know if we can get a lot higher in hogs. We were talking maybe 120 earlier. I have my doubts on that. These are high prices.
Very high prices, very, very high prices. And I think overall, with livestock, we'll see what the next few weeks hold with summer grilling season and more, and just see if demand could continue. Talk about the dairy side of things a little bit here, Brian. What are you seeing on this Monday as we start a new week?
Yeah, well, we saw a really kind of sour end of last week is what we saw. So the dairy market is just, again, all these deferred contracts, really, really nice textbook uptrends. What does that mean? That means you go higher, you set back, and then you take out the previous high and set back, but not as low. So you have higher highs, higher lows, nice uptrends there, good demand-driven market. As we've said, we're worried about the production numbers. There's every reason to increase production until about the last month. All of a sudden, you get another kind of big leg higher in corn prices, soybeans breaching the new highs. So we're not necessarily convinced that that the end user is going to with blind faith, go in there and keep milking the way they are. We get the cattle market up much some. We think there's going to start to be some idea of liquidation. And part of that is if you're a corn producer, all of a sudden you've got the best prices in 8 years. And if you're a dairy producer, it's like, well, do I really want to hold back some of these cows, or do I want to go for the sure thing, which is planting and harvesting corn? So I think you've got some shifts starting to occur here in the last week or so in the dairy industry.
Well, hopefully that shift, we'll have to see, that continues here, and may we be a good one all around. I know a lot of folks, a lot of farmers sentiment out there. We've talked about this before, Brian. A lot of guys and gals maybe a little nervous with some of these high prices, just because, again, to kind of wrap this all up, there's a lot of profitability on the table, and they don't want to miss out, depending on what commodity they're trading, or on the flip side, if they're seeing, prices that are taking a hit, they're a little concerned about how they're going to make money, especially in cattle right now.
All good points.
Mhm.
Every week's a little different. Every day's a little different. I think the cattle market will be okay, though. I do. I think we've got an undercurrent of demand there. And I think it'll show up. I think the consumer is going to. Now, maybe it was Mother's Day, but we were out and about a little bit, and my goodness, restaurants were packed. Texas Roadhouse was packed. There's some movement amongst people. I don't think like we've seen in maybe 18 months or so, or at least 14, 15 months. Grain markets. So this is where it's kind of the rubber hits the road after today. Is it a correction, or are we getting the high end? We got some stochastic things that happened today that maybe argued for selling. So from big picture perspective, it's time to really start making some sales that matter. If you haven't, about covering those sales, about just being real balanced.
Very, very true. And I know producers need a little help figuring out that marketing plan. They can reach out to you and the team there at Total Farm Marketing. It's as simple as a phone call or a visit to your website, isn't it, Brian?
It's that simple. And the phone call, the number there is 800-334-9779. Would love to have a chat. 800-334-9779.
Or you can find them online, totalfarmmarketing.com. Brian, appreciate the time as always. Thanks for joining us here on this Monday. Have a great week.
My pleasure. My pleasure, Jesse.
Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk. You can find us online, markettalkag.com. Today's episode brought to you by FS Growmark. This has been the Monday, May 10th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.